Yeah, can you simplify the main tax bombs to be aware of in retirement? Okay, so number one would be know your tax brackets. And let me pull up a copy of the tax brackets because that's probably the most important thing is just to first start with an understanding of which tax bracket are you in. So this is for 2025. We'll look at married filing joint, singles, different tax brackets, different income amounts, same tax brackets. So there's 2, 4, 6, 7 brackets currently, and it's actually a hot topic now in government legislation because they're trying to pass the next big beautiful tax bill or whatever Trump calls it. But currently the rates are pretty low historically as compared to historical standards. So for someone, let's say that makes $100,000, let's say you expect to have $100,000 of income in retirement, you would be in the 22% tax bracket, $96,950 or over, and it's an average. So you wouldn't be taxed on all of your money at 22% if you make $100,000. The average would be more like 15% because the first 23,850 is taxed at 10%. And then the next roughly 60, 70,000 is taxed at 12%. And then the next is 22. So the first big jump is 12 to 22. Once you're over roughly 97,000, then it's only 2% difference at 206,000 plus. And then the next big jump is at round numbers 400,000. So first is just understanding and being aware of which bracket are you in. And when it comes to knowing your brackets, another big aspect is the IRA versus the Roth IRA distribution. IRA distributions are taxed, whereas Roth IRA distributions are non-taxed because you contributed to the Roth IRA after taxed. So this is a big consideration here because if you are pulling income from your IRA, it's going to add to your tax bracket. So, if you take out an additional $50,000, it's going to impact your taxes. And, oh, by the way, you also want to be aware of the California, state taxes. So in California, these are the state tax rates before I was showing you the federal tax rates. So again, it's an average of the brackets. This middle one here is married filing joint in terms of the account. So if you're making in terms of the election of what you're filing tax as. So if you're making about $100,000, you're in the 6% tax bracket in California, and that's going to average out from 1 to 4. The highest bracket is 12.3, I believe, or the highest, if not one of the highest states. That's over, getting close to 1.5 million of income. So you'll want to take that into account as well. So maybe between the two states, if you're at 100 grand, between the two taxes, between federal and state, maybe you're around 21, 22, 23% of effective tax rate, which is the average of all the brackets, which is what you're actually paying of tax divided by, what you made for the